And good morning, everybody. Greg Taylor here from Solder Brothers. Thank you for joining us. We'll be making a start in approximately 2 minutes' time. Hello, everybody. Greg Taylor here from Solder Brothers. We'll be making a start in approximately 1 minute time. Thank you for your interest. Okay, let's make a start. Good morning and welcome to Solder Brothers Emerging Companies Limited webinar. My name is Greg Taylor. I'm the portfolio manager at Solder Brothers Equities business and appreciate the opportunity to provide an update on SB2 today. The presentation I'm sharing has been shared with the ASX, and you can access that for further information, including the details of the disclaimer here. Today, I'm glad to be able to present with you a bit of an executive summary, provide an overview of SB2 Emerging Companies Limited. I'll share my perspective on the small cap market. Obviously, a lot of volatility of late, including overnight. So I'll share the views there. Then I'll dive into SB2's recent performance and what's driven that performance over the last 12 months, including some detail around the top three contributors. And we'll dive a little bit deeper with a stock-specific investment case study, which really highlights our philosophy and process in action. And then we'll move into the current portfolio, touch on the top 5 holdings, as well as the key portfolio metrics. And then we will move into discussion around the discount to NTA, which is quite an anomaly at the moment with SB2, and I'll share a little bit of colour around that and some steps we're taking to address that matter. As you'll see here, there's the opportunity for Q&A. You'll see on the screen, you have the ability to click on the Q&A section and ask any questions. I have Megan who is monitoring those questions, and at the conclusion of the presentation, I'll address as many of those questions as time permits. We've allocated up to 30 minutes, so through to 11 a.m. For this session, and if you don't get an opportunity to ask the question today, my details are also included on this presentation, and you can contact me following, and I'd be happy to engage with you directly. All right, just to start with an overview, and I think first best to introduce myself in a little bit more detail. Again, Greg Taylor, the equity director at Solder Brothers and the portfolio manager of Solder Brothers Emerging Companies Limited, SB2. I have over 25 years experience investing in listed small caps in the Australian market. I was fortunate to work with a couple of the better known investment houses in the country, including a lot of time with the Schroders Australian equity team in the early 2000s, and fortunate enough to have some great mentors and learnings from that experience that's served me well through the last 25 years and been through a few cycles, that's for sure. And I look forward to sharing a little bit of that experience and insight with you today. On Solder Brothers itself, Solder Brothers is an institutional fund manager, global fund manager with over $3.5 billion of group assets under management. They're focused on alternative assets, and they're spread across the asset classes of equities, property, and credit. Today, I'm here to speak about the equities product, and though you'll see also in the contacts page at the back, we have Yossi, our head of distribution, who is available to speak about the other products offered by the Solder Brothers Group. Though more specifically, excited to be speaking to you today about the Solder Brothers Emerging Companies Limited, SB2, which is a listed investment company, and it is very much dedicated to investing in small cap Australian companies with a market capitalisation of less than $500 million. In a nutshell, it offers a professionally managed and diversified exposure to the Australian small cap sector. And we'll talk about the benefits that brings, especially with the overlay of the current discount to the underlying asset value. I've introduced myself, but it's really important to call out the team here at Solder Brothers Equities. I'm fortunate to have a great team. Got some very experienced analysts and in our team, including Keegan, Francis, and Dane, and with some oversight from Tanae Matanda as well. And the SB2 board is a very experienced group of professionals. What I'm pleased to be able to report is SB2 as a listed investment company and as a product, in the last 6 months has broken through its 3-year track record, and really pleased to report that the performance has been strong across that period. And I'll shortly dive into a bit more detail around that performance, but having that 3-year track record's a really strong catalyst for the product to be more widely regarded and researched across the broader market. So very important milestone for us, and really pleased that the performance the fund has been able to deliver. The aspect I will focus today on is the current discount that the SB2 share price trades to the underlying post-tax net tangible asset value. That's at a pretty significant 41% at the moment. Again, I'll talk about that in greater detail, but what that means is the current mark-to-market value of the assets that form the fund is circa $100 million, and you can buy them for $60 million approximately. So creates a really interesting arbitrage opportunity. And in all this context, it's really important to understand the broader market, and again, very topical of late, as we've seen quite a bit of volatility and some sort of once in a cycle 20-year cycle condition in small caps. So I'll talk a little bit about that as well, and that's probably where I'll start today. And if you look here, I've provided some key points around our current view towards the Australian listed small cap sector, which the SB2 fund focuses on. We recently released a research paper a more detailed research paper on the sector and our views on the recent history and the outlook. That's available on our website and also being shared on LinkedIn. And if you'd like a copy of that and you're having trouble sourcing it, again, please reach out to Yossi or myself. But the interesting state of play in small caps is we're at a 20-year scenario. Once there hasn't been a period for 20 years where small caps have been at such a discount, relative valuation discount to that of their large cap peers. And we all sort of appreciate and respect cycles, and over 100 years of data and history suggests that there are times that small caps outperform large caps, and there are periods of time when they underperform. What we've seen over the last 3 years is this underperformance, but it's created this significant divergence between valuations, which it's really difficult not to form a view that the risk versus reward from this point in time is very much in favour of small caps. But I'm not a technical chartist, and I'm not relying purely on the power of cycles and 150 years of history. We really focus on fundamentals here at Salter Brothers, and we've done a lot of work around the fundamentals of small cap companies that make up the index in which we reference. And what that research shows is that they're actually really strong fundamentally. And so there's two key factors that we focus on is around the balance sheet strength of these companies, their ability to fund their operations, and then secondly, their earnings growth outlook or their earnings outlook. And our detailed research points to balance sheets in good shape and better than average, better than the last 30-year average. And that's across the board. And so what that shows you is that the risk for some sort of funding issue has significantly been reduced, and these businesses are well placed to support their operations going forward. Then if you dive into the next key point around what is the earnings outlook for the constituents of the small cap sector, and again, this is fundamentally positive. It's the earnings growth outlook. What we're seeing is greater than 50% of the companies in the index are expecting double-digit earnings growth and significantly higher earnings growth than that of their larger cap peers. So again, the earnings outlook quite positive. You put those two things together, and it bodes well for the outlook for small caps over the next couple of years. The key question is what's the catalyst and what will we see be unlocked? And I think again we go back to fundamentals, and we can look to the US market, which is often referenced in global equity markets. And what we're experiencing in Australia is very similar to what's happening in the US market as well. Their index, the Russell 2000, again significantly underperformed its larger cap peers, and also at 20-year extreme valuation discounts to the long-term average. So it's a global phenomenon, and what's driven it really is something we've all been talking about over the last 12, 24 months. That's inflation and interest rates, and basically how the interplay of those result in the global economic performance as well, or will the economy go into recession? And we're very much in the camp that we think there's a soft landing here. We're very much getting to the end of the interest rate raising cycle, and there's increased talk, and as recently as overnight there was quite a timid or a mild inflation print in the US, where there's significant head of steam of people in the camp that the next move by the Fed will be to reduce rates in the US, and we're seeing similar trends in Australia, and that may be 3 to 6 months behind the US. But again, it feels like we're very close to the top of the interest rate hiking cycle, and the trend from here is down. So if we can get to that environment, look, I was looking at some statistics this morning that were shared, and it's again 100 year of history of how do the equity markets perform after the first interest rate decrease? And in the event that we do not fall into a recession, what that shows you is that the average performance following that is 30% upside. So again, the key assumption is we do not go into recession either in globally or in Australia. And again, the key indicators are still suggesting that is likely to be the scenario of a soft landing and not going into recession. So the outlook looks absolutely well placed for small caps to perform and outperform significantly over the next couple of years. Moving on to SB2's performance. So we talk about the greater than a 3-year history now and some recent performance as well. And as pleased to report, we've had significant outperformance across all the key short-term and medium-term measures. And that's despite the volatility we've seen in the small cap market over recent years. And we're very much focused the fund on capital preservation and medium to long-term growth. And we've been pleased to be able to deliver that for the fund. And I think what will be interesting is to dive into what has driven that performance, especially over the recent 12 months. Sorry about that. So what I have here is the top 3 contributors to the fund over the last 12 months. And the top contributor was an enterprise software business called Encerata. I'll actually provide a case study on that on the next slide. So I won't jump into too much detail in that beyond the point that again, over 100% absolute performance over that 12-month period. The other 2 key contributors here, which I'll just touch on, is MedAdvisor and RPM Global, or RUL as it's known on the ASX. So firstly, MedAdvisor, it's a global healthcare business that's driving the digitisation of medication and pharmacy services globally. Very strong presence in the US, dominant market player in Australia. And we saw this business break through $100 million of revenue, deliver its maiden profit and generate strong cash flows. And really strong thematic of this digitisation of healthcare and the facilitation of the services, and is extremely well placed for further growth. So it's business where we actually built our position below 20 cents a share, and as at 30th of June, it was sort of trading north of 50 cents a share. Our valuation sees a lot more potential for that, but it's good to see some early rewards for that holding. The next one is a company, as I said, RUL, global software business for the resource sector. It's mission critical software that's used by some of the major mining and resource companies we'd all be familiar with, from your BHPs to your Rios and again, very significant revenue growth, very sticky revenue, strong margin expansion, and just really deep IP and strong management. All those things we look for in our companies. And again, this company is seeing close to 100% share price movement over the last 12 months. Just to dive into a little bit of detail around the top performing stock, which is no longer in the portfolio because it was a recipient of a takeover, but Encerata was the company. Again, a software business that basically provided data room and document management products for the investment industry and increasingly into the broader governance and compliance industry. It's a company that, again, I've been following even from a pre-IPO company before it was listed for, close to 10 years and have, watched it closely. And, we had a strong view and positive view of management. And we started building a position in 2022. And that's how we often do it. We do a lot of work, detailed financial analysis, spend time with management. We competition, and industry specialists to really understand what's driving the company and the outlook for the business. And then we build into a position over time as we build our conviction. We were fortunate that as we were building our conviction, that the sentiment in the broader market was dropping off, and what we were able to do was to increase the holding to a top 5 holding in the portfolio in mid 2023. And I remember it quite starkly because we were buying the shares and, in these small cap names, the sort of word gets around that you're the buyer in the market, and the selling just kept coming. It was like every day I had a different broker calling me saying, "Oh, here you're buying some Enserado. Do you want some more?" And we backed our conviction, and we got to the target weight, and it actually wasn't long after we started getting rewarded. But the absolute catalyst for this business was it was a recipient of a takeover. But that was part of our investment thesis, because we really did believe that this company had a really unique product, strong market share position globally, and was misvalued. And time again, if the listed market doesn't re-rate and capture the value, it will get acquired by financial or trade buyers, which was the case here. And what was interesting also, just excuse me, how we traded the position. Once it received the takeover offer, it went up to the takeover offer was at $2.50 a share, and it was trading around $2.45. And we thought, that there was only a bid at that point. It wasn't approved by the regulator, and wasn't, all the due diligence from the acquirer hadn't been completed. So the risk versus reward had definitely been opportunity being closed, and we decided to exit our position at that time. What actually happened since that was that there was a little bit of a complication with the regulatory approval, and the share price subsequently dropped 10-20% following our exit. I'm pleased to report for Enserado and other shareholders that takeover ultimately is getting approved, and the share price is back to $2.50 now. But we're able to recycle that money 6 months earlier, and use that in the market, which was great. Now, just moving on to the portfolio and what's in there now. And again, what we focus on again is companies under $500 million of market capitalization that have strong management, earnings growth, and an element of intellectual property, or real moat around their business that gives them some pricing power. And we're not a technology fund. We invest in various sectors. You'll see this from your top 5, but you might see in some other marketing and media have done. I'm a big fan of AI media. I really think the outlook for this company over the next 12 to 24 months is extraordinary. And in my 25 years, I've had the pleasure of seeing companies go from $50 million to $1 billion plus companies, and AI media has the attributes to achieve that. What they do is they do the capturing and live recording of voice to text in various media applications. They've got a really proprietary position with the infrastructure that they control in the capturing and recording and delivery of those services. And in my view, my humble view, it is the clearest and greatest beneficiary of this AI trend that everyone's been talking about the last 12 months. Ironically, a lot of the market initially thought it was under threat by AI, but quite the contrary, we've formed the view that it's a potential significant beneficiary. So really excited about the upcoming result and outlook for that one. A couple of the others in that list you might be familiar with. OFX, used to be Oz Forex. Again, global business. It's really enterprise or business to business focused, multi-currency exchange provider. Again, I think the management team here is as good as is available in the Australian small cap market. Got a really high regard for management, and again, think it's fundamentally mispriced. So that's another one. A couple of others just to mix it up. There's one there which was a good positive green shoot for small cap market is number 4 there, our Fabs. We actually invested in that 3 months prior to its ASX listing in June. So it was a pre-IPO position. And it's a more traditional industrial services, does engineering and asset hire into the construction and mining sector. Great management team, really valuable set of equipment that they've got, and some unique contracts, and trades at low single digit earnings multiple and on a free cash flow north of 10% yield. So we think once the world becomes aware of that as a recently listed ASX company, it has a really exciting outlook. So if you just step back, what are you buying when you're investing in SB2? I talk about this diversified portfolio and actively managed portfolio of quality growth small cap companies. And we spoke about, we've got the macro benefit or tailwind, which we believe is coming on the broader re-rate and positive price performance of the sector as a whole. But you've got a very experienced and proven team actively managing that with our discipline, philosophy and process to deliver you a diversified exposure to this part of the market. And the portfolio itself has at any time between 25 to 30 holdings, spread anywhere from a 1 to 2% position for the smaller holdings up to a 6 to 8% position for the higher conviction holdings. But if you look at what is that basket or that portfolio of stocks, what's the profile of that? We've been able to pull together in this unique time in the cycle a quality portfolio where the revenue growth is circa 18%. I was actually doing an analysis. All but 2 of the 29 holdings are forecast to be profitable businesses, and so you've got real established, growing, profitable, quality businesses on very attractive margins and earnings multiples, and that's what the table summarises there for you. And I guess just to close on this point, we're managing listed small caps for over 20 years, or it's 25 years, and it's very rare that you get the opportunity to pull together a portfolio with those metrics and a weighted average valuation upside of greater than 80%, and hence why I am quite bullish about the outlook. Right, just to close out before we go to it, Q&A, is this topic around the share price currently trading of SB2, currently trading at a 41% discount to the underlying asset value, and that's been driven by there was a number of large sellers which were just unnatural holders in the fund, and they were sort of forced sellers, and so the old adage of supply was greater than demand, and hence the share price went down. You might have seen in the recent trading volumes that we've cleared out a lot of that selling, and the selling's really dried up now. So, but we're really focused on the demand side or the buy side interest in SB2, hence holding this webinar today, and a really concerted effort to raise the profile and opportunity of SB2. Look, the average listed investment company currently trades about an 8 to 10% discount to NTA. So there's no promise or guarantee that we'll get it to asset value, but we're really focused on closing that gap at least to below 10%, which creates a significant upside from the current SB2 share price on the successful execution of that strategy. And what we're doing, in addition to forums such as this, we're due to release the FY24 annual results in late August. That'll enable the share buyback that's been in place for the last 12 months to be reactivated, and we'll continue to be active in the market with that. And then also, as we move towards our AGM, our information memorandum and prospectus has always had the intention to have a dividend issued, and a consistent dividend for the product. and we look forward to providing the update to the market around the AGM on the board's current thinking and decision on that inaugural dividend. In addition to that, really keen to get out. I've already met many of you in person around the country over the last 12 and 24 months, but in mid-September I'll be around in all the key capital cities, meeting investors to raise the profile and awareness of SB2 and the ability to get to know a few of our investors and hopefully join a few more investors to the register. So if that's of something of interest to you, please do reach out and we'd be happy to schedule a meeting. That brings an end to the presentation. I will hand over now to Megan to address any questions that have been raised. And again, if you do have any questions, please enter them in the Q&A box at the top of the screen.
Greg, hi. Thanks for the presentation. We did have a couple of questions. I don't know if you can hear me, which have gone on the board there. There's two questions because I think we're about to run out of time, and I appreciate that many people have to leave. The first one is around the return since inception. You'll notice that that's come up there, and the other one is just talking about how you've calculated the discount to NTA and how that's been calculated. So I don't know if you'd like to answer those two questions, Greg.
Yes, I'm looking at them there. Warren's got a lot of questions here. So the performance since inception is an absolute performance, not annually, is my understanding, and we'll confirm that for you, Warren. The NTA at the end of July did not exceed the high watermark for the fund. So there's no performance fee payable or has been activated. So you'll see we continue to be active with the buyback. There's been some ongoing buyers join the register, which has been pleasing. And yeah, Warren's having a real go here. No, Warren, actually, quite to the contrary. The performance is well ahead of market for this month as well. So the figures quoted here are as at the end of July, though the fund this month is nothing like 7% down, and it's actually about 4% ahead of market again. So despite your negative lens there, you might need to do a bit more focus on that. But look, yeah, so Warren, look, I think I'll take it offline. You seem to have a real interest and a focus here. So how about happy to take you offline, have a chat to you in person, and see if you can provide a bit more context around your questions and where you're coming from there. It might be the same Warren who was at the AGM who was taking this same angle.
Thanks, Greg. And obviously, we can come back to anybody that's got questions. You've got my email address. You've got Greg's contact details as well. And like the individual that Greg was talking about, I've emailed you directly with my details that we can have a separate roundup call, and you've got my email address to reach out and we can arrange a call, and that's open to anybody else on the call. But we appreciate everybody joining. We're going to be looking to continue to send out monthly updates, which you'll be receiving. In addition to that, we'll also be trying to do regular webinars where we can talk about what the status of the fund is, so everybody can participate and we can have those regular updates. And again, thanking everybody for their time in joining.
Thank you.
Thanks.
Yossi.
Hey mate, I was trying to put up my hand and message you, but well done on that. And just by the way, you were sharing your screen at the end, and we could see all your messages and everything. So just be aware of that when you do webinars. But
not a booklet, but a fund, a fund type demo that he can show us if we wanted to.
Yeah, I want to see.
And he gave us some high level costings